Hello, my name is Robert. I'm a tax attorney, and I'm going to explain to you why your offer in compromise may not get accepted. And a lot of people are selling these offer in compromises like it's a really easy thing, and sometimes it is, but a lot of the time it's not. And a lot of people just aren't going to get it. And these are the two main reasons why you would not get an IRS offer in compromise. Number one, you make too much money. So at the end of the day, your available income is just too high. Number two, there's too much equity in assets, which means you could basically just pay it off if you sold your stuff. And we'll go over these in a little bit more detail. So making too much money. The IRS determines you can pay it off based on how much, quote, available income you have at the end of the month. It's not all based on your actual expenses. The IRS has collection financial standards, and you can Google that and take a look at them that apply. And people spend more than those amounts. So they think, oh, I spend all my money and I'm broke, so I should get an offer. And here's an example. There's a lot of people that make $100,000 and they're single and they got nothing left over and they owe like $40,000. Well, when you apply all the appropriate numbers, unless you got some crazy medical conditions or some other crazy things you're paying for, most likely you're probably just not going to be able to get an offer in compromise on that $40,000 debt. Your best option is going to be setting up in a payment plan and requesting a first-time penalty abatement. That for most people, that's going to be their best option if there's no other way to fix it. Too much equity in assets. The equity in your assets, even if valued at 80%, meaning the assets valued at 80% and we see what equity is left over, could pay off your tax debt if the assets were sold. There are some ways to get around this, but as a general rule, it's how the IRS calculates offers. People with assets that are substantial but are broke month to month are good candidates, though, for currently not collectible status, and you can see a link below for more information on that. And here's an example. You got a debt of $100,000 and your 401k is valued at $200,000. Even after you pay the penalties, the taxes, the early withdrawal penalty, and all that type of stuff, and even if you value all the stocks at 80%, at the end of the day, say you can still pay the $100,000, well, that's not really an offer, even considering, your month-to-month financials for the making too money part would line up. And here's an example where you can sometimes get around that. We had a client who owned a mobile home that was worth about $30,000. They paid off the mobile home. They owed a tax debt about $30,000, but we said that if they were forced to sell the home, they could only afford rent for a couple of years and then they would be homeless. And the IRS accepted that explanation and still accepted an offer of $100 on the $30,000 debt. So if you're not sure what to do, get a free consultation. You can call us at 888-515-4TAX. That's 888-515-4829, or go to trp.tax/start. If we cannot help you, we'll tell you and point you in the right direction. If you're going it alone, check out our free tax help guide by searching TRP Tax Help Guide on Google. If you need a question answered, just comment on our YouTube videos and a tax attorney will answer. Thanks for watching and have a great week.